வணக்கம். டாக். In finance, a dog is a business unit that has a small market share in a mature industry. A dog thus will not generate the strong cash flow and does not require huge investment. The Dogs of the Doe is an investment strategy popularized by Michael B. O. Higgins in a book 1991 and his Dogs of the Doe website also. This strategy proposes that an investor annually select for investment the 10 stocks listed on the Dow Jones Industrial Average whose dividend is the highest fraction of their price, that is, stocks with the highest dividend yield. Under other analysis, these stocks could be considered dogs or undesirable as companies often raise their dividend in response to bad news or a decline in share price. But the Dogs of the Doe strategy proposes these same stocks have the potential for substantial increases in stock price plus relatively high dividend payouts. The origin of the term may be lie in the use of dog to refer to an underperforming stock. The phrase is often used in bull markets to signify that buying activity has become speculative, as in everything is going up, even the cats and dogs. Dogs are often traded as penny stocks by the companies with small market capitalizations and limited trading volume. They normally trade over the counter, short form it is called OTC, without much regulatory norms rather than on traditional exchange. Dogs refers to stocks of companies that engage in shady business practices and are traded on a speculative basis. The dogs are rumored as fraud, wrongdoing, or malfeasance among company managers or directors. The investors in such companies may be at an elevated risk of fraud. Dogs are often included in illegal pump and dump schemes. Pump and dump is a manipulative scheme that attempts to boost the price of a stock or security through fake recommendations. These schemes are focused on thinly traded OTC companies. OTC again, it refers over the counter, whose price may swing based on small amounts of buying. In share market, dogs are those stocks that have been beaten down by the market due to their poor performance. Many financial analysts look into the dog stocks closely as they expect these stocks to recover in the upcoming days.